Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at Earnings Beats. I want to welcome you to this Monday, October 25th, 2021 edition of Trading Places Live at Earnings Beats. I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. We've got futures up a little bit this morning. This is historically the worst week of the year. We'll see whether or not the market can sustain its overnight action to the upside throughout the day, but at least starting off, looks like we're ready to maybe try to make another run at a breakout on both the Dow and the S&P 500. NASDAQ futures actually are up a little bit more on a percentage basis, but that's the index that probably has a little bit more room to get back up to those all-time highs. Right now, NAS futures are up about 50. Dow futures up 21, S&P up 7. That was probably as of about 5 or 10 minutes ago, so they may have changed a little bit, but that certainly points to at least an open to the upside, even if it's just slightly. We got a lot to go over today. I'm going to try to go through this really quickly, but before we get into any of that, I do want to take you over to Earnings Beats. Those of you who are new, would love to have you check out our site and, of course, sign up for our free newsletter. But if you go over to earningsbeats.com, couple things. ChartFest, we do still have this recording up over at our website. If you haven't had a chance to take a look at that, we'd love to have you take a look. I had Grayson Rose and Dave Keller from Stock Charts both join me a week ago Saturday. Just taking a look at our routines, going through and using the Stock Charts platform. I think there's a lot of great information in there. Some free giveaways. All you have to do is click on that link, get more information. Also, you can subscribe to our free Earnings Beats Digest newsletter simply by scrolling down, typing in your name, email address, hit that subscribe button. No credit card required. You can unsubscribe at any time. It's a 3 times a week newsletter, very simple read. Normally, it's just a couple paragraphs and a chart. Today, I featured a company that has a tremendous track record in the month of November seasonally, and the company's just recently broken back out above key moving averages. Really looks good. Anyhow, you can get information like that through our free Earnings Beats Digest newsletter. And also, anytime we have an event like we did with ChartFest, any free events that we have, we reach out to our Earnings Beats Digest community to let them know and to provide them room instructions and so forth. So there's a lot of good information there. And I think you would enjoy it if you're not already a member there. All right, let's take a look at what happened on Friday. First of all, Dow Jones Industrial Average was up 74 points. You can see right up there in all-time high territory. S&P 500 doing the same thing. We got up as high as about 45.60 or so intraday, which was an all-time high. Came back down around 45.44, and knowing the historical headwinds that we face, knowing that we're right up against this resistance, and I'm going to talk about some negative divergences. If you read my Trading Places blog article on Saturday, when I started looking at all my charts and I went to the intraday charts, I couldn't believe how many charts showed negative divergences. Now, they don't guarantee us anything, but they just tell us that things are maybe a little riskier than normal. So I just think this week you want to be a little careful. But the S&P testing that high was down 5 points for the session on Friday, even though it did set an all-time high intraday. NASDAQ, this is what I was referring to when I was talking about the futures, a little bit more room to the upside before we hit that all-time high. And we are seeing the NASDAQ lead a little bit on a relative basis. Wouldn't surprise me if we see that here early in the week. Mid caps up 3 points, roughly 0.1%. Small caps up, but less than that. So fractionally challenging these overhead areas, though. I'm going to talk a little bit later about some chart breakouts. Wanted to point out that the ETF that tracks the S&P 400 mid-cap index, that's the MDY, set a new 52-week or an all-time high on Friday. Financials leading from a sector perspective up 1.4%. Energy up almost another 1%. Been very strong over the course of the last 2.5 months. Staples regaining some strength, moving back through the 50-day moving average. That was up 0.75%. Real estate up almost 0.75%. Very strong action here over the last 2 weeks in real estate. Communication services, though, the worst performer by far, down 2%. Internet stocks got hit really hard on Friday. Snap came out, talked a little bit about the privacy issues at Apple and how that's going to affect their advertising revenues going forward. They missed their revenue estimate, took down a lot of the internet stocks, some of the software stocks, and as a result, communication services took a big hit on Friday. So that was your loser, down about 2%, and also nearing key support down around 79. And we were up at 86 at the beginning of September. So this is a group that hasn't just been poor or weak for a day or two. I mean, this one's been going on now for about 6-7 weeks, where communication services, we've seen a lot of money rotating out of that group. I suspect if we get back down around that 79 level, we probably see the buyers run right back in. But when you look at this, and I'll talk a little bit more about this in just a minute, but two of the two groups led on Friday, staples and real estate, not exactly what we want to see as we're breaking out to new all-time highs, seeing the defensive areas among our leaders. But financials, this is a group that we do like to see moving higher as more and more money flows out of treasuries overall, sending the yields higher. This is a group that tends to benefit, and it is what I consider one of the 5 aggressive groups. I prefer to see technology, consumer discretionary, and communication services leading, but financials and industrials take their turn from time to time. And I can tell you October, November, December, this time of the year tends to favor financials and especially industrials. All right, moving on, looking at that 10-year treasury yield, let me give you an update here. We are up a little over 1 basis point this morning, back to 1.67%. We are trending higher, certainly look like we're going to go up and test that 1.75 area, maybe breakout, we'll see. Wouldn't bet against it. I think 190, 195 could be not too far down the road. I don't believe we're just going to go shooting higher, but I wouldn't be surprised if 175 is tested, possibly even 195 this year. Financials relative to the S&P, when you get the yields rising, that's what I was just mentioning. Look at the financials relative to the S&P 500. Right now, we're sitting at about a 4.5 month high relative to the S&P 500. So financials certainly getting their fair share of money rotating in. Finally, we're starting to get some strength in industrials. Industrials have been downtrending for about 4 months relative to the S&P 500. That seems to be changing, and we're going into a month that typically favors industrials. Industrials love the month of November. All right, let's see, what else do I have for you today? Let's move on to talking technically. Let's start off with the S&P 500. So I wrote an article. If you didn't have a chance to see it, go back into the articles. And well, you can start over here. Could we have just topped? And then also this one. This is the one I wrote on Saturday. U.S. equities have one very serious short-term problem. I'll come back and look at that in a second, but just take a look at the S&P 500. Here, this is an hourly chart, and I can go back 4 months, show you what can happen with negative divergences. So here you can see slight uptick here, higher prices, roll over, and then had a pullback. Here, higher prices, PPO rolling over, and pretty lengthy pullback. Here, higher prices, lower PPO, pullback, just down to support, and then we move back higher. Here, higher prices, lower PPO, there's the sell-off. So here we are again now, rising, got that PPO going lower. Are we going to pull back? Well, it's not a guarantee, but as I just pointed out, it does raise some red flags. And I think the odds are, if I had to put odds on it, that we're probably going to either pull back or we're going to at least go sideways. Can we go higher? Sure. Market can do anything. I mean, we could take off and the PPO could just go straight back up and eliminate that negative divergence. That's certainly a possibility. But after we've made this big move, we've kind of gotten into the, we broke out to a new all-time high, but it's not exactly been flying since we broke out, pulled back to the 20 and then tried again, but haven't been able to really do a whole lot. And as I mentioned earlier, this is the worst week of the year historically through Wednesday's close. So it was last Friday through this Wednesday's close. It's actually 6 calendar days, and this year it's 4 trading days that are impacted. So it's just something to be aware of. As I always say, my historical patterns, my seasonality, that is a secondary indicator to what's going on in the market. But what I see going on in the market is a negative divergence. So it kind of adds to that short-term bearishness. But we are looking up here at the open. We'll see whether or not we can hold it. I'd be a little concerned maybe about a gap and then falling back, but we'll see what happens. Don't know for sure. Just play it by ear. But there's your S&P 500. If I move on to the Dow, I mean, you can see the higher prices right here and the lower PPO. So now let me take you back to that chart or that article. So US equities have one very serious short-term problem. So here are your negative divergences. This is just scratching the surface. As I started going through these charts, I couldn't believe how many charts were showing me negative divergences. There's the Dow Jones. Here's the S&P 500, which we just talked about. Here's technology, the XLK, negative divergences. How about the XLY, negative divergence? XLF, negative divergence. XLI, negative divergence. This is 4 of our 5 aggressive sectors. Of course, the XLC doesn't have one because we're not moving to new highs. The XLC, as I pointed out, the open communication services has been under some selling pressure. But you can see the negative divergence here. So how about transportation? Transportation stocks are on fire right now. Negative divergence. Semiconductors moving up, trying to make a big breakout. Negative divergence. Tesla, big move up. By the way, Tesla, I think last time I looked, was up $30 or $40 pre-market. Breaking out to an all-time high last week. Stock looks great. We'll see what happens. I don't know what the PPO is going to do at the open when it gets up to, if it opens at 940 or 950. But you know, maybe we eliminate it. But that's just one, that would be one. Apple, look at Apple. Looks like it's just really struggling to go much higher as the PPO rolls over. Microsoft, move up. There you can see the PPO down. How about NVIDIA? Moving up, negative divergence. AMD, moving up, negative divergence. I mean, the list just went on and on and on. And I finally got tired of putting charts in here. I mean, that's a lot of charts, but all of them negative divergences on the 60-minute chart. Now you got to understand, a 60-minute negative divergence is not the same as a weekly or a daily negative divergence. Many times these hourly negative divergences can play out over the course of 1 to 3 days because all you're looking for is a reset. I mean, it could be worse than that, but what I look for, and normally I'll draw arrows in here, but I look for a PPO 0 line test and potentially a 50-hour SMA test, and you know, one or the other, or maybe both. That's what I'm looking for. So on the Dow Jones, we're at 35,677. We're only talking about going down about 300 points, which is less than 1%. So this isn't, you know, when I pointed out all these negative divergences, it wasn't to paint this picture that we're going to collapse or something. It's just to say short term, we have some momentum issues that many times will be rectified. And if they are, look for PPO center lines, 50-hour SMAs, potentially to be tested. All right, so there was your Dow. Now, another problem that I had with the market on Friday and really with last week in general is look at the sector summary here. This is a 1-week sector summary showing us which groups led us to all-time highs. Real estate, healthcare, in the 4th spot, utilities, 3 of the top 4. And these were the 4 that were over 2% last week. So these are the ones that really drove the market. 3 of the top 4 are defensive groups, and the other was financials, which was nice to see. So, and it's only 1 week. I mean, obviously, if you're doing this for a period of several weeks, or you know, you get into the months, then we got some real problems. But I think short term, having this type of leadership kind of fits in with that short term cautiousness that I would just be, you know, maybe just a little careful this week. For me personally, what it meant is just trimming back. I made some of my positions, I just cut back the size of the positions going into this week. So I just built up some cash. I did not sell. I'm not out of the market, anything like that. But I definitely cut back and significantly in some cases. And I'm okay with with knowing history, knowing these negative divergences are out there, knowing all these earnings reports that are going to come out. And by the way, tonight, Facebook reports, it's going to be very interesting to see what Facebook has to say and what their advertising revenue may look like going forward. Maybe they've escaped it, some of the issues, but they haven't been trading particularly good. So Facebook will be an interesting one to watch. And we'll look at that chart, hopefully, if we have time in just a bit. But just wanted to point that out. One other thing today, crude oil, last time I looked, almost $85 a barrel. So you can see crude oil now has broken above that 2018 high. Doesn't look like a whole lot to stop the price of oil until we get up to about $100, $110. So if you think you've been paying a lot at the pump lately, probably going to be paying a little bit more based on crude oil continuing to rise. Now, some might say, oh, this is horrible. My gosh, energy prices are up. This is bad for the market. This is bad for everything. I've always kind of said, you know what? When crude oil prices are going up, there's a pretty good chance your IRA, your retirement accounts are going up, because what this reflects is global demand. And global demand is what drives equity prices around the globe higher. So the downside is paying more at the pump. The upside is your 401k is probably doing a lot better. I mean, I'll take a much higher 401k and pay the higher crude oil prices. But anyway, just wanted to point that out with this breakout and the way it's going. I mean, I don't really see a whole lot here on the chart, to stop this until we get up maybe at least to 90 and probably even to 100 or above. So just strap on your seatbelt there for crude oil prices. All right, let's look at some breakouts from last week, some that maybe you're not aware of. I'm going to start off with Travelers, TRV. Look at the sideways action for 6-7 months. Finally, we made the breakout on Friday on Travelers. So I think Travelers is a pretty good play here in the fourth quarter. I'd expect it to go higher. Some of these groups, some of these stocks that didn't participate over the last 6 months that are now breaking out, that are part of groups that tend to do well in the fourth quarter, I'd pay particular attention to them, and Travelers fits that mold. Mentioned Tesla. Tesla finally getting above 900, broke out above that January high this morning. Let me just see if still, I'm sure it's up. Yeah, $40 to $950, up another 4.5%. I mean, Tesla just not looking back right now. Very, very strong action, breaking out and continuing it. Now, what you don't want to see on your stock doesn't mean it can't go higher, but I don't like to see false breakouts. I don't like to see this. Intraday, we had this move. Look at the volume picking up. We had a breakout intraday and then came back down and closed near the low of the day. That normally is not a good sign, although I mentioned a similar stock. I forget which one it was last week. It looked like it was breaking out, false breakout, and then the next day I think it broke out. So nothing guaranteeing that it can't break out. It's just, I think in the short term, just creates some added risk in holding. So ROP, Roper, setting a new high, but not closing there. How about WRB? This is WR Berkeley Corp. Breaking out, look at the volume picking up. So that was a nice breakout, getting through that 81 area, actually closing above 82. Tyson Foods. So talking a little bit about some of these staple stocks, but Tyson Foods there makes the breakout. Closes at 82.50, getting above that August high. Raytheon. I looked at this, I was like, oh my gosh, aerospace, what's going on? Raytheon has been moving pretty well. And when you look at the stock relative to its group, it's clearly one of the leaders in aerospace. So if you're looking for a stock to give you representation in aerospace, I know the group hasn't been very strong, but Raytheon, been a great performer. GPC, this is Genuine Parts, making breakout on Thursday and then continuing it, but did come back and reverse a little bit on Friday. Still like it on any kind of a 20-day test, though. I mentioned the mid-cap 400 earlier. Well, there's your MDY that tracks it, breaking out to a new all-time high. So great action there. And industrial Waste Connections, triple top breakout. Actually occurred on Thursday, added to it on Friday. Looks good. You can see down here the waste group, waste and disposal services here, making a nice move to the upside. This has not been one of the better stocks in the group, but it just made a breakout. So we may see that relative strength pick up. And then you can see the group overall strengthening relative to the S&P. Let's talk a little bit about a financial here. Intercontinental Exchange Group, ICE, which had made a big breakout in October, just continues to move higher and higher. Really good action here. You go down, look at investment services, it's been moving up. And finally, we're starting to get a little bit of relative strength here in ICE. If we could get back up through this high right here, we'd move to about a 6-month relative high. So that would be good news. I think this breakout is starting that trend. I would expect ICE to continue to do well. Chubb moving back into the insurance area, just making a breakout there. You can see its peer group just broke out. So good action there. How about General Dynamics? Defense stocks have been horrible. General Dynamics 52-week high. I wasn't expecting that when I looked through the 52-week high, but we do have defense groups breaking out, which is good. And GD has been a pretty strong performer right here, strengthening up to this high. Now that we've gotten this breakout, I'd be looking to see if we can get some relative strength building again there. Union Pacific Railroads. So again, some of these groups that haven't been doing much, all of a sudden, Union Pacific breaking out to a new high. Very good action there. And then throw you a healthcare stock, Steris, breaking out last week. Very strong action there. The AD line going right up with it. And you can see the relative strength building versus its medical equipment peers at about a 5-month relative high. So those were just a handful. What I did is I went and looked at the 52-week highs and then looked only at the stocks that had scooters below 75. So what that does, it doesn't guarantee it, but for the most part, if you've got a stock with a scooter that's only 70, 75, chances are it hasn't been going up and up and up every day. So you get a lot of these stocks that are going sideways and then make a breakout, which I think is a better breakout. If you've been basing for a while and you make a breakout, I think that can lead to some more serious gains. So anyway, those are the chart breakouts for today I wanted to go over. Wanted to talk a little bit about small caps. So if we go up here and we look at the small cap 600, you can see we've been going sideways, but we're starting to build here, and we're also starting to hold on to this rising 20-day, which is now clearly above the 50. So if we can get back up through this high, and this is going to be the one to watch, June 9th, the open 14.15, the day before it closed at 14.14. So that is your area that we've got to get a breakout here. And we're still about 30, 35 points away. So we got a couple percent to go. But small caps, when you look at them on a relative basis, seasonally. So let's go here. Let's take a look at the small caps and then pit them against the S&P 500 and go back 20 years. The outperformance begins in November. You outperform in December, January, February, and March. Small caps, the next 5 months, historically over the last 20 years, have outperformed starting in November. The S&P. Summertime, not very good, but once you get to November, it starts to pick up again. So just keep that in mind as we take a look at some of these charts. So what I wanted to do is look at this is the PSCE relative to the XLE. So it's the small cap energy ETF versus the large cap energy ETF. And you can see over the last 2 months, we're starting to pick back up again. Now I'm going to do this for several different sectors. This is discretionary stocks. Discretionary small caps are going lower versus large cap. Part of that's because Tesla has been on fire. Tesla's got fairly serious weighting in the XLY. So that's part of what's going on here. But it's just good to know that the larger cap discretionary stocks are doing better. How about industrials? They're starting to show strength. Which group should we be focusing on, large cap or small cap? Well, it looks to me like small caps now. We've come down here in the month of October, but small caps, I would say, maybe we're starting to turn back up. Been trending higher for the last 3 or 4 months. So this will be an interesting chart to continue to watch. Small caps, if you see that this line starting to turn higher again, I would be paying attention to the small caps. Financials have been under more pressure. We have strengthened over the last 6 weeks, but notice we're back down below the 50-day moving average here on the PSCF versus the XLF. So this one I'd be a little more careful about. I like financials. But at this point, I'd probably be sticking to the larger ones based on what I'm seeing here. How about technology? PSCT versus the XLK. Small caps not doing well versus large caps. So right now, large cap technology is where I would stay. Utilities, if you're a fan of the utility group, get this to, there we go. First of all, I'm not really a big fan of utilities in one of the strongest quarters of the year. And the small cap starting to turn back down again. Still got a little bit of an uptrend. It really needs to turn here. How about healthcare? Healthcare, small cap's been under pressure now for many months throughout most of 2021, starting all the way back in February. So not really seeing anything here. I'd be careful with the small cap healthcare. And then we'll look at the last one. Let's look at materials. Small caps, yeah, they're rolling back over again. So I would say, looking at the small caps, probably, what was it? Pull up the energy. I'd say energy is probably the strongest in terms of small caps right now. And then what was the other one? Was it the industrials that were they'd gone up, but they had rolled back over again. Yeah. So industrial's been moving up for the last 3 or 4 months. I mean, if I was looking at small caps, maybe those two areas on this recent pullback, maybe you can find some small cap industrials really close to key support levels. But that's how I would use this information. I mean, I'm not seeing a whole lot of strength, but if we get that breakout in small caps, because remember, small caps been sideways consolidating for a long time while the S&P has been going up. That's why many of these small cap areas are not doing well. But if we get the breakout on the small caps, I would return to these charts and start taking a look at which industry groups which sectors are showing strength in the small caps. All right, earnings. Couple that I'll talk about first. Well, actually, let's go over the ones that have reported this morning. Kimberly-Clark missed $1.62 versus $1.66. Stock down 3.4%. You can see it was downtrending for the last 7 weeks or so, or 6 weeks. So not really looking very good. Wasn't too far away from a multi-month low just recently last week. So KMB not looking good going into earnings and not coming through either. Otis Elevator beat 77 cents versus 73. Stock down 2.25% though. Needs to get back through 87 through that 50-day, maybe even get through 88 would be even better. Still got some work to do there. QSR, this is Restaurant Brands International. They beat 76 cents versus 75 cents. Stock's been downtrending up 1%, but it's got work to do. I think there are many other areas of the market, of this area of the market, the restaurants, that I would be looking elsewhere. LII, which is Lennox, missed $3.40 versus $3.64. Stock's been downtrending for a while. That's, Wall Street telling you, they're telegraphing that stock, they don't like it. And we find out why. They missed their bottom line, down 7%. And then I wanted to pull up this little one, smaller semiconductor stock, up 5% in pre-market. This is Magnachip Semiconductor. They had a really nice beat, 42 cents versus 22. Stock's been beaten down pretty badly. It looks like it's going to open in breakout territory, 1890 right now with just 2 minutes to go. So maybe something to look at. All right, these are the three I'm going to give you for the three you must see. I'm going to start with Facebook. Let me get this set up. Facebook reports after the close today. So Facebook, you can see there's the downtrend. I don't know. Look at Facebook relative to internet. It's down near a 52-week low. Wall Street isn't overly impressed here. I'd be careful with Facebook. And even if they come out with decent numbers and they gap up tomorrow, you might see a sell-off after that. I'd be a little careful here. CDNS, Cadence Design Systems. This is in the software space, trying to make a breakout. Nice little cup here, by the way. It showed relative strength, pulled back, starting to strengthen again. But the weakness came when it was in this pattern, this cup. So we'll see what happens there. And then the last one I'll show you, this is Logitech. which will be reporting after the bell tonight as well, as will CDNS. Logitech's been downtrending for a while. Look at the relative strength versus computer hardware. I would not be looking for much good stuff coming out of Logitech later today. All right, that's it for me. I want to thank all of you for tuning in to Trading Places Live. I appreciate you stopping by. I'll be back tomorrow for your next Trading Places Live. You can see that over at Stock Charts TV. Starts at 9 a.m. Eastern. So just click on there right at 9 o'clock and you can tune in. And I hope to see you there. You can see here, market has opened. We are up a little bit on the NASDAQ. S&P up over 5550. Can we hold these all-time highs on the Dow and S&P 500? That's going to be the question for today. Everybody have a great day. See you tomorrow. Happy trading.